Good morning, conveyancing world, and welcome to episode 6 of the State of the Market for UK Property Lawyers. I'm here today with Steve Hinshelwood, who is the Chief Executive Officer of Taylor Emmet Solicitors in Sheffield and former Chief Executive Officer of Blundell's Estate Agents. So he's quite a unique person in this industry, a non-lawyer running a major league law firm. And welcome, Steve. Hello, Steve. Can you hear
Morning,
me?
Richard. Nice to be with you this morning.
It's
I
nice to have
can.
you with us
Thank you.
too.
Yeah, nice to see you.
I've got to do the usual in terms of thanking our sponsors, 20 Convey, who have provided all the data today. And also a big thank you to Chris Watkin, who runs the State of the Market Stat, or the UK Stat Show for estate agents, whose slides we rely on in the early part of this show. So a big thanks to Chris, and a big thank you to 20 Convey and 20 EA, who provide amazing data which we can base upon these shows. So here we are at the end of May, and the market seems to be going okay. How is it for you, Steve, at the moment?
Yeah, I think that's a good description, Richard. I think okay is probably the word. I think the general feeling is that things are definitely better than they were during the latter part of 2023 in particular. There probably was a little bit more optimism that interest rates might have started to fall, or certainly the mood music would be different to what it currently is. We've seen, obviously, and I'm sure we'll talk as we go along, but we've seen quite a big shift, haven't we, in terms of the positioning of what's expected to happen with rates in the second half of the year. But I think okay is a good description. I think there's definite positivity since the start of the year, and I'm expecting probably be very interested to see what the figures say around that.
Okay, well, you mentioned the figures, so let's get into it straight away. And as always, we like to focus initially on the estate agency data, because the data that's coming out of the estate agency world is a precursor of what happens to conveyancing. A house comes on the market today, it might sell in 3 months' time, and then obviously it'll take 113 days on average at the moment to sell. So you're talking about a 6 to 7 month process. But if you want a predictor of what your income's going to be as a conveyancing firm in 6 to 9 months' time, looking at how many houses comes on the market is crucial. And we can now give you that almost up to date. I mean, the data that I'm showing on screen now is up to the 12th of May. And you can see at the bottom, we've had 666,945 listings so far this year. Steve, comments?
Yeah, I think that I think the real positive there, obviously, as you say, Richard, and I couldn't, with my background and the fundamentals of the whole moving process, which obviously lots of us in different roles are involved in. The key point is we're trying to help people move home and find somewhere to live. Actually come back to listings. If you don't put the houses, if they don't come to the market, then obviously the knock-on effect of that is there for all obviously to see. I think the fascinating thing for me here is the positive increase year on year on listings on about 10% by the looks of it from 23 and 22 roughly the same from that perspective. But actually what probably does surprise me on this slide is unexpectedly is to see that actually we've got listings levels above 17 and even 18 and 19. So that was quite surprising to see that, Richard. But again, I think an air of positivity by the fact that there are more people feeling confident enough to come to the market. Obviously, I'll be really interested to see as we go along what that actually means in terms of gross and perhaps in particular net sales. But that's a real positive start.
Okay. And here on this next slide, what we're looking at here is the weekly number of listings that are coming to the market. And you can see the white line is 2024, and the pink line, we've been consistently about 10-15% above that pink line, which is last year, 2023. These little dips are the bank holidays, because they're only 4-day weeks. And you can see we've just come off the back of a bank holiday at the May. We haven't got the data to last Sunday. We're only up to the week after the bank holiday, you can see it dropping down. But I'm pretty certain it's going to rise back up following that blue line of 2018 and a little bit above, but consistently above the pink line. Which is fantastic news, isn't it? Because that's not just a blip. It's not just a one-off that we're above accumulatively. It's all the way through the year.
Yeah, again, I'd agree with that, Richard, very much so. I think you make a very good point that sometimes you do get blips and lots of activity, but this appears to be pretty consistently showing a trend of being above. Looks like there was a little bit, just looking at the graph, a little bit of a dip down week 12, 13, 14, but pick back up and over.
Yeah.
Obviously, what we'd be looking for, as you say, in 2 or 3 weeks' time is hopefully see that accelerating through the weeks at the end of May and into June, and following the trend. We maybe talk a little bit later about how the trend goes as the year goes on, because that's where I personally would hope to see quite a bit of difference based on what on 23 and some of the challenges we faced in the second half of 23. But its consistency is much better than just one-off peaks and then troughs. It looks like a very consistent pattern and theme, doesn't it? Which is great.
It does indeed. So, I mean, we've picked up on this in previous shows, but supply and demand is obviously fairly important. The fact that a lot more houses are coming to the market than in the last 6-7 years, to some, I mean, there was one quite famous commentator in the last 18 months been saying that house prices are going to crash. And I don't think that's going to happen, do you? I mean, looking at these numbers here, we've got 666,000 on the market. Total houses for sale back in November when house prices were rocketing after COVID, we only had 360. So there was no supply and lots of demand. Up went the prices, and therefore people might say, well, okay, now we've got more supply, will prices come back down? But I don't think that's going to be the case. If we look at the same point in March 2008, after the financial crisis, or just at the start of the financial crisis, we had 1.4 million houses on the market. Now that was oversupply, not enough demand, and down came the prices, of course. So we're in a bit of a Goldilocks zone here. Do you agree?
Yeah, I would. I mean, it brings back some memories to see that stat from 2008. In fact, to be honest, memories that probably most of us would like to forget. But I think the figures speak for themselves. Clearly, 360,000 on it.
Hello, Steve. You with
Hello.
us?
Yeah, sorry, screen went. Sorry, bit of a techie there. We're back, fortunately. Really, at that level of properties and stock is just not enough to facilitate normal activity in the UK housing market. And as you say, when you get that situation, you're going to get a huge amount of over demand, which is what we had. We probably had per house, I suspect, in my career, up there as some of the highest demand there's ever been. To me, that it looks about right in terms of the if you like, the sweet spot for property available and normal levels of demand and people looking for property. I think it does vary. I suspect if we were going to regionally review, or even within regions, there are still areas where there are properties now probably without enough demand, but we also have areas and properties where there's still more demand than there are properties. But for me, that number looks to be about in the right place, and both anecdotally and from what we can see, house prices appear to be there or thereabouts holding. They're certainly not crashing, and I would agree with your sentiment, Richard, that at these sort of numbers, this doesn't look like there's a housing crash in the imminent time frame. Particularly now, I suppose the bigger question will be, as interest rates fall during 24, perhaps more in 25, what does that actually mean for prices? But and again, perhaps people might take a view that they'll actually start to move up a bit again. But at the moment, my impression, speaking to agents from data, is that they're fairly stable, which is a good thing.
It is. So moving on, you talked about the longer term trend. Once, of course, houses are on the market, then we've got to sell them, or the agents have got to sell these properties. So here what we're looking at are gross sales. That is the number of sale agreeds at any one period, and the number for the conveyancing world, the number of memorandums of sales dropping on your doormats every morning or into your desks. How many? And again, we see exactly the same pattern with a full year in flow here. you can see the white line above last year, but consistently above the pink line. Okay, even right up to the Maybank holiday, and again above the yellow, blue, and red of the 3 previous years. This is looking in a good story, isn't it, Steve?
Yeah, and I think that I think that's a surprisingly positive story as well, Richard. Probably that not only is it above 23, but as you say, at the moment the gross sale line in the last few weeks has been higher than any of the previous years,
Yeah.
which obviously from a conveyancing point of view for most firms won't be showing from an income perspective at this point. Obviously that's probably something we'll be picking up on as we go along, and we're probably hopefully going to see as we move along to the sort of weeks in the 30s and beyond that starts to translate through
this is your
from
peak
an
here, isn't
income
it?
basis, certainly income related to completions.
Yeah.
But it looks strong. Obviously, what will be interesting to see as we go through the slides is where the net sales position relates in terms of when we take fall throughs into play, which I know you'll have some stats on, and what actually is ultimately going to be the outcome. But that's a positive story. It's keeping in percentage terms, it's keeping in line with the instructions, which is really positive.
Good. Yeah, it is. So it shows that the demand is out there. Accumulative sales growth. So this is the number of sales so far this year compared to previous years. We're at 456,000, 10% above last year, which is just, well, you're definitely seeing that in your own numbers.
Again, yeah.
And again, consistently above the 17, 18, 19
that would be
figures.
about right.
And above these 17, 18, 19 figures, Steve, which, we can't look at these post-COVID years were exceptional and probably never to be repeated. But the fact that we were above 17, 18, 19 puts us in a good position, which is good for conveyancers and better for estate agents.
It's very positive.
Right, you mentioned fall through rates. I just want to point out these 2 peaks. These 2 peaks relate to the Christmas period, because what we're looking at fall throughs is on any one particular week, the number of cases that have fallen through versus the number of listings. And of course, in December, there's hardly any listings. Cases still fall through, but no listings, and therefore the percentage creates this artificial peak in this graph. So you can ignore those 2 peaks. But beyond that, what are you seeing there, Steve?
Yeah, I mean, I suppose if you look, you've got a fairly consistent range, haven't you, from round about the 20%, although you have got some periods. I think if we go back to 23, and then compare that to 24, where you were seeing a difference is that in 22 and in 23 is that you've got a market that obviously with the COVID had a dramatic effect on fall through rates. Come out the back of that, we then got into very low fall through rates by percentage terms, probably for some of the reasons we've just seen, where the market was so competitive, the options were limited. Probably reasonable to assume that people were inclined, they wouldn't pull out perhaps unless there was a very, very good reason. Or they were less likely to pull out. Obviously, fall throughs occur for a whole host of reasons, perhaps some more significant than others. Looking at what we are seeing by the graph, we are coming at low point of round about 20%. Obviously, as you take into account what you're saying as well, Richard, of obviously the ratio is linked into instructions and the effect, the peaks. It looks as though there's a slight increase going on. I wouldn't say it's a particularly worrying increase at the moment, but it looks as though there's an increase which might be again slightly changed sentiment. What this does throw out for both agents and for conveyancers, I have to say, I think in my view that the conveyancing market, having the being in the unusual position operated in both environments, tends to be less aware of the impact of fall throughs than perhaps estate agents are, who are very aware of it as part of their sort of weekly figures, for example. But of course, what it is saying that on average, at least 1 in 5, if not 1 in 4 transactions that we start work on is not going to complete, and that's an enormous amount of abortive work.
Yeah, well, it is enormous, and a lot of lost money. And a lot of firms, well, estate agents all work on no sale, no fee pretty much, don't they? Law firms, no sale, no fee is common amongst some of the bigger factory firms and some of the panel firms, obviously. How are you feeling about that at the moment? Do you operate on a no sale, no fee basis at TE?
Well, yeah, we do a very limited amount, but we've taken quite a strong line in terms of our sort of commercial proposition, and really for the taking into account, the fact that 1 in 4, 1 in 5 transactions are not going to go through. And I think we've also got to be very clear here. This is historic. I think if you took that data back into the 17s, 18s, 19s, you would see the same trend. So that's part of the business model. So our view is that the no sale, no fee model really, as it's been placed in the market at the sort of fee levels, just doesn't, quite frankly, doesn't work. So we have taken a stand, which does carry risk. We'll see later. I think you're going to show some market share statistics. So we do have now our model actually does incorporate charging clients at varying stages in the process. So not just taking money in account, but actually charging clients as the work goes along. And we found, interestingly, that whilst that clearly can be a barrier, particularly perhaps with first-time buyers, which, as I say, carries risk, but we have found in general it's actually been quite well received by most people,
So
and an awful lot of clients more than understanding of that. So we are essentially probably only doing about 20% of our work on a no sale, no fee basis.
Right, that's interesting. So not many firms charge the clients as they go along. Maybe that's something that can be learnt from your experience, that clients are prepared to pay as the transaction proceeds.
I can guarantee that a significant percentage are, but again, it would be disingenuous of me not to acknowledge that in some instances they're not, and therefore that carries risk, and it does carry the risk of losing some work, and that's the difficult balancing act. But a lot of people are prepared to pay as they go along, as they are, by the way, for lots of other legal services. If one thinks about it,
Yeah, of course.
when you actually start to put that into context.
Okay, so we'll just follow that through. I'll just quickly, I mean, these are the actual percentages over the whole year of fall throughs, and the long-term trends, the 7-year average is 24.28, as you were saying, but in the last 4 years it's been significantly below that. But it is, you can see there is a general rise back to that.
Up.
It's creeping back. Okay, now you did mention earlier net sales is the real predictor, and this is the net sales. Net sales being the number of gross sales that we looked at earlier, less the fall throughs, gives you a real position of what's going on in your pipeline. So whether you're an estate agent or whether you're a lawyer, your pipeline's crucial. For most lawyers, they'll have known that as work in progress, WIP. And this is really what you whip on your conveyancing market. Again, it's pretty useful stats. I mean, look at the white line again above the pink line of 2023. So our WIP's better than 23. This yellow line, of course, is the big crash of COVID when there was nothing going on because the whole market was suspended. And then immediately after the COVID lockdown was released, you can see everybody went out and bought houses, and this area under the yellow line here is broadly similar to the hole that was created by the lockdowns in the first place. So if you ignore the yellow line and just look at where we are from the average of 27.19, the orange line, so comparing white to orange, you can see we're consistently above it. And then follow the track through. So Steve, I'll just let you tell the viewers today how that tracks through and what you view of that.
Yeah, I think that again, obviously there is a relationship which is good to the instructions, to the gross and to the net. Obviously that relationship might be getting slightly more impaired if the fall through rates are increasing. That might get closer to the pink line. Obviously the key for us is, for everybody, is being above that pink line. That's the potential good news as the year winds itself out. Obviously in an ideal world it would be good to sort of start to follow. And the biggie probably for me is, as we move through this year, is where we see that difference, Richard, between the pink and the blue and the orange line So if the pink and the orange line were sort of crossing over each other, weren't they? But we
Mm-hmm.
then see when we get to sort of the middle of the year, then suddenly there's a dramatic fall away with a little bit of a
This
pickup at the
area
back
here.
end of the year. But obviously that's when net sales are very low anyway. So yeah, and this has had a huge impact. And I think as well, I don't think at first everyone quite realized how bad that was. But obviously the impact on that has been dramatic, that sort of period from, yeah, if you're a customer, as you say, from sort of week 23, 4, around that territory, there's a dramatic fall away, and that's had a huge impact on everybody in terms of the size of their pipelines and obviously the revenue in the back end of 23 and in the first sort of 4 or 5 months of 24. Because again, if you've got these really low sales levels, down at week 35, 6, 7, these transactions probably aren't getting through in the calendar year 39, 41, these really low numbers coming into 2024. So the hope has got to be perhaps that we don't, that's where you'd hope that we don't start to track with 23, albeit above, and that hopefully as we go through the remainder of 24 we track closer to this orange line, which on the last set of weeks we've actually been above, haven't we?
Yeah, we have.
Which is, we kind of below and above them, sort of moving around. But if we could, the expectation, hope perhaps is that certainly up until, I noticed the orange line dips below the pink line back at the end of the year, but theoretically that's got to be the big. So I think that's the big message here, is that all being well, the trend is positive enough for us to go closer to trending with the orange line rather than the pink line, which will have really positive implications for everybody.
Yeah, I mean, I think all the law firms I've talked to over the last 4 or 5 months have been saying that while new instructions are great, cash flow is terrible because there wasn't enough completions coming through in the first 3 or 4 months of this year. And now we're starting to see that cash flow unwind because these transactions do take 113 days or thereabouts. So from now onwards through June right the way through summer, we would expect to see a good positive cash flow for all firms and a lot of completions coming through, which is great for estate agents as well, of course.
I think absolutely. What we're seeing there, Richard, is a legacy of that pink line, isn't it? What you're showing is the really poor performance in the second half from sales in the market in 23. And obviously then that has had effectively 6 months, isn't it? It's from week 20, it starts to dip at week 21, doesn't it? It's 6 plus months, 7 months. And then you've got this pickup that we've seen at the start of the year, but going right back to your first slide, it begins with the instructions, doesn't it? So the whole thing starts with more instructions coming to the market, as you say, gross selling, net selling, and effectively then when it comes through onto completions is going to be in the second half of the year.
Steve, just before
that's good news for all of us.
Let's not ignore the elephant in the room at the moment as well. We have just had an election called, so for the next 5 weeks, what's your experience over the? I know you haven't been in this game very long, Steve. I don't want to cast how many elections you've actually had to live through.
Just a young lad like yourself, yeah.
You're just a young lad, it's our first time around the block.
I don't know the number, just a lad, but it's a really really interesting.
Go on, sorry.
Sorry, we lost. Yeah, it's a really interesting question. Funnily enough, I was just chatting to one of our partners about that. Historically, we would definitely have taken the view that the run up to an election will be a negative in terms of activity in the housing market. It will slow it down. There would be less property coming to the market. I'm not so sure that's going to happen in this election. That's just my personal view. I've got a really kind of weird feeling about the whole thing. I've hardly heard anyone even mention the fact that there's an election, but again, maybe that's just me. It has historically. I think that would be. I'm sure others could probably give the actual analysis on that. But in my certainly my recollection and sort of overview is that historically you would see a reduction for no particular reason other than there's an election coming up. Because I think there's quite a lot of data that
reduction in what, though,
changes
Steve?
of government and what that does to instructions. So right back to the beginning. So less, new houses coming to the market, people holding off, waiting for the outcome of an election.
But well, I think
But I'm
what.
not so sure that that's going to happen on this election. That's my personal view.
Okay. Well, obviously time will tell. I think it's.
Obviously, if it were to follow, yeah, time will tell. And it might be as a lot of these things are, Richard. They are recollections. They're not always correct. But I would be interested to see the data around the
Yeah.
elections and whether that theory is correct. That the number, whether it obviously this type of quality of data doesn't go back through that many elections. But that
No.
would be my experience. And
I
obviously
think.
what that would do if there was a reduction in the instructions, that would have a bit of a knock-on effect further down the line. But I'm personally of a view that might not be going to make that much difference. Although interestingly, I am being told this week, and some of our figures do suggest the number of new conveyancing instructions is perhaps less than we would have expected. But
Yes.
again, that also is there is a half term in this area this week as well, so it's difficult to gauge. But I'm not expecting it to have a huge difference, but
Yeah.
I think historically it would have an effect on instructions, and then the market would start to move again after the election. It just seems to have that
Yeah.
type of effect, not necessarily in terms of who's in government or who's not in government.
So you make two fantastic points there. Actually, one, I'm speaking to lots of law firms across the country, and certainly this last week, new instructions, number of quotes coming into those firms has dipped somewhat. People are saying, "Oh, it's not as many
Yeah,
quotes coming through at the moment." There's
yeah,
no
that,
doubt
yeah,
that I'm seeing that. Um, but while I hope that I was thinking that might be election, the very valid point you make is that it is half term and we're off the back of a bank holiday, so a lot of people have gone away, and I
yeah.
think the dip is, well, let's go away for a few days, take stock, have a bit of a break, and maybe not going out buying houses. But again, it's too early to tell just right now. I think we'll have a better picture when we come to
It's
do this
too
in a
early to
month's
tell.
time.
We'll probably, yeah, agreed.
Okay, so
You'll know in
moving
a
on.
month whether or not has been that dip.
And we talk about the longer term thing. I've pulled out a couple of slides from our guest from last month, Anthony Codling at Royal Bank of Canada. And this is a graph that goes back to 2006, so, nearly 20 years. And it shows the total number of transactions in the marketplace over that period. And you can see the greyed out sections of the two recessions of 2008, and of course the big drop in when COVID came along.
In
But
COVID.
yeah,
Yeah.
but last year, look at last year. You were saying last year was a bit of a disaster, and we were well below the million
Yeah.
transaction level. We were at sort of 600,000-700,000, as we showed earlier, and this is now picking up again. But what do you make of that graph?
Yeah, apart from it brings back memories of some boom times in 2006 and 7. So I'm showing my age there at the
You remember this boom?
these peak years there. And as you say, and then of course the exact opposite that we had, but for a more sustained period than we had in COVID. It's a slightly different graph, isn't it, to
Yeah.
the 08, 09, and then the recovery. I mean, we're currently obviously we then got back, as you say, it's a very interesting graph, obviously, as we see 13, 14, big spike in 15, 16. I'm not quite sure why that one is, but very consistent numbers, isn't it? All the way through,
I
really.
think
So
your
for
15,
6, 7
16 is your
years,
stamp duty.
round about that million mark.
15, 16 was your
Yeah, it
stamp
must have
duty
been something
holidays.
like that did
It
something
brought,
dramatic to it,
yeah.
and obviously the dip, and then big numbers up, and then obviously the huge numbers in again with stamp duty, if you think again influencing in 21 around these holidays, making these big spikes probably,
Mm-hmm.
and yeah, then that dip back to the million number, but then going below it, which is obviously the concern, because if it stays at where we were in 23, I think it would be reasonable to assume that poses challenges for everyone in the sector.
Yeah.
And the hope obviously is that we're going to see as we move through 23 that is again an upward move. Perhaps over the next couple of years, moving back more towards that line that
Yeah,
we
yeah.
were in, which is a if we were to get back to that, I think my comment would be, Richard, that's a kind of world that works pretty well for all of us.
Yeah, I think that's
And
definitely where
I
we're
think
heading, isn't it?
across the sector, whether it be in estate agents, conveyancers, mortgage brokers, everybody, and hopefully that's where we're heading back to.
Okay. Also, I'll just very briefly touch on this as well. Um, mortgage approvals Again, brilliant for the first part from 1993 to 2008. It was all boom, mostly apart from the one dip here. But since then, it's been a bit of a poor thing. And more recently, 2023,
The roller
the
coaster.
worst, almost the worst number of mortgage approvals we've
Yeah.
ever seen. And obviously coming up. And that has led.
Yeah, incredibly challenging for the guys in that sector.
Yeah, and this is incredibly challenging now for first-time buyers. And look at this graph. I mean, I know you had a look at this earlier. What's your view on mortgage terms now being at 31 years on average?
Yeah, you something probably many years ago you could never have imagined, but I think the market's got used to it. To be fair, I think younger people have got that expectation. In fact, I think that again, I suspect the stats on first-time buyers, if we were going to split them out, I suspect they're nearer 35 and in some instances 40 years. But it does raise the question, of course, Richard, ultimately of how far can that keep stretching at the end of the day? The graph's going back roughly a 20-year period, and we've moved 7-8 years. If we move another 7-8 years, we're up to nearly 40 years. So that does raise serious concerns around affordability and people's ability to buy houses, and therefore it's that dilemma for those that are already, clearly it could be very easily argued that any significant increases in house prices are going to have really big repercussions to that. That is not a sustainable for me, that's not sustainable to keep going up at the way it's going up. Challenge. It has to level off.
It's certainly a big challenge for the next
2 or 3
governments. Okay, so just looking at the conveyancing stats now, I'll run through these en bloc and just sort of have a review. Basically, this is the 2023 data from 20 Convey. There were 613,000 completed transactions up to the end of the year, which is less than there was up to September, which obviously included the quite boom time of 2022. So that's why it's down. The average house sale price was 355,000, broadly similar to the September figure. Leaseholds made up 23%, and of course leaseholds have had a bit of a problem since the Grenfell disaster, certainly in all the high-rise over 4-storey properties. It's a big issue for people, that and that's almost a quarter of all transactions. The average time to complete, 113 days. This has been coming down. Okay, so the average time to complete in September 23 was 117. It's come down 4 days. It does vary from firm to firm. It does vary from region to region, and it very much varies depending upon whether you've got a lot of leasehold flats in your area. So if you've got a lot of leasehold flats and high-rise flats, that's a much, much bigger figure. So those firms in London operating at the London market, you're seeing this huge delay in transactions because Building Safety Act issues cause a problem. Post-completion times, that's more to do with the efficiency of law firms. I know 20 Convey Richard Hinton likes to focus on this and say, how efficient is your firm? How are lenders looking at you as a firm and saying, well, how long does it take you after completion to get those applications into the land registry? Again, the average time is coming down, and I put this down to just the quieter the market, the more that conveyancers can get on and do their jobs. When the market gets busy again, then it becomes both average time to complete and the time to do post-completion work, I think will start to stretch out again. And what we're seeing now, with this busier market, I think we'll see over the next, when the data comes out in 3 to 6 months, we'll see that this average time to complete is starting to go back up, unfortunately. Views?
I would agree with every word you said. I think, unfortunately, if we look at that time to complete, taking a view to how low the market actually has been in terms of volumes, it has to unfortunately be recognised that an increase in volumes is probably going to mean some capacity issues. There's also a broader subject around process as well, but it certainly would be quite realistic to assume that could go in the wrong direction, which would be Obviously a negative countering some of the positives we talked about earlier. I sincerely hope it isn't, but I think you are probably right, and hopefully it'll be at a manageable level. But it would perhaps be reasonable to assume that will take place.
Okay. So I'm just going to rattle through these next couple of slides, Steve, if you just bear with me, because they're about the data more generally here. And if we could show these on screen, what we're looking at here are data from 20 Convey that show the largest, the firms with the most completions. Now, as I've explained before on previous ones, we've removed from these figures those law firms who are not your traditional high street firms. So the likes of My Home Move and O'Neill Patient are not appearing on here because they're backed by private equity. They've got completely different business models to the majority of law firms, and we've also not included the consultancy type firms like Taylor Rose and Setfords, because they're like a conglomerate of 1,000,001 individual consultants. So this sort of bias the figures. So we're just looking at the more general high street type firms. And what you can see here, again, the figures show that there was a combined 57,430 completions last year from these 20 firms, but that was a 5%, 1,937 drop on the figures from December 20, from the previous period. So these are the biggest firms. Gorvin's up in Stockport and Davison's, whose market share is growing really rapidly, actually. All the way down to firms in Huddersfield like Holden Smith doing 2,000 completions a year. And so these are the significant players. Okay, the only new firm into this category of top 20 was Switch, which I think I've just renamed from Shoesmiths. I'm fairly certain that Switch is the Shoesmiths brand as it was. I'll just go on to the next slide here. Looking at those 20 firms, they make up 9.34% of the total market. So these 20 firms in order make up a fairly significant chunk. So you can see how it's starting to consolidate. And if we're talking about consolidation, look at this for a particular graph, this pie chart. So what this is showing is that 6%, the top 10 firms make up 6%, the next 20 firms make up 7%, and if you look at and then the 30 to 100 firms make up 13%. So in total, we are talking 26% of the market, of the total conveyancing market, is made up of 100 firms. 26%, just over a quarter. There are then another 4,234 firms doing conveyancing who make up the rest. So consolidation is happening. It's been happening for a long time, and I don't think it's going to stop. What do you make of that, Steve?
Yeah, I think that's probably likely. I think it's surprising to me that it's not actually happening at a faster pace in that respect. I know there's some other slides, other firms missing, but I think the realities of what's involved to do conveyancing, both effectively from a service proposition, compliantly, and empathetically, which is a huge conversation, which is not one for just now. The realities of that, to get that right and operationally, are just huge. And I think we will see over time. I'll be fascinated to see as you go forward with these, how these stats move, and whether that 26% when it hits 30%, I would have thought it would, and beyond over the next few years, because the reality is, I think that unless you're doing this on a to a certain level of scale, with a certain level of process and procedure, the obligations from a PI point of view, and the biggest obligation actually to do this both effectively from a technical perspective for your clients, but also empathetically to do it really well, is such a huge challenge. And I think we will see over a period that what you're saying there, this will expand, would be my expectation.
I think you're probably right there, Steve. But it would be interesting to see, to come back in a couple of years' time and see whether this 4,200 figure is reduced.
That looks, yeah.
Okay. I'm gonna quickly review through this because I want to get to the interesting bit, and which is our little look at Sheffield later. Here we're just looking at the largest leasehold firms, and I think the point I was trying to make here, these firms, you can see the graph as it comes down, the blue bars, those are the largest leasehold companies in the country. So from Connect to Law down to Convey Law. are the largest 10 leasehold firms, but look at the time it takes them to complete. There's no consistency. People blame leasehold for taking times, but if you look at Gorvin's here, they've got an average time for doing leasehold work of 112 days. Simply Conveyancing Property Lawyers average time of 115, and yet people like Talbot's are at 125 and Convey Law 133. So there's a real discrepancy in how long firms are, and you could almost argue that some firms are just not geared to doing leasehold work and perhaps should concentrate more on the freehold stuff or put some more resources into it. But I'll move on. Times to complete have been coming down. Again, looking at just these largest firms, the blue is to December, the orange is to September. So if you look at Gorvin's, they knocked 3 days off. Davison's knocked 5 days off. Convey Law only managed to knock 1 day off. Bishopsgate Law, impressive, 150 for a London firm to get it down to 115 days from 119, operating mainly at the London market. That is a big thumbs up to Bishopgate's Law. Okay, just overall there, we saw the fastest firm were doing it in 74 days, and the quickest and the slowest firms were doing it 156 days. That's looking at the top 250, I think. So it shows the discrepancy between good firms and bad firms. You can improve it just by having your own efficiencies. Okay, and again, time to completion. Again, this is who's got their act together in terms of administration work. I will give a shout out to these firms because they did really well. MJP over in Norwich, Bishopsgate in London, TQ Property Lawyers.
No, that's impressive.
And Let's Move Conveyancing. Oh, I know Gary Macaulay very well. He's celebrating Celtic winning the league, but I don't think you'd be too happy with that, will you?
Not particularly, no.
I'm not talking football today. I'm off football altogether. No comment. Okay. Yeah. So the bit that I thought you would be most interested in, we always like at the end of every show to have a little focus on a town. And seeing as though we've got Steve with us today, who's probably running the biggest firm in Sheffield, both now as a law firm and then previously as an estate agent, we'd have a big focus on the Sheffield area. So I'm going to not talk so much now. I'm going to hand over these to Steve. Steve, this is your market share in Sheffield. And there we go, Taylor and Emmet, almost twice as big as anybody else.
Yeah, we do. Yeah, we do have the largest, I think, our market share we have had for a long time. We are using the data from 20 Convey to try and analyse it in more depth. And I suppose our challenge is we're trying to two things. We're trying to balance share against commercial terms a little bit, as you alluded to earlier, Richard. So, for example, by definition, perhaps by taking a more positive, or you could call it aggressive line in terms of fee structures, that can have some negative impact on share. Steve, I would say it definitely has in the.
Could I just ask you, when you say you've taken a more aggressive line, does that mean you've started to cut your fees to win that market share?
No, aggressive line the other way. So we've increased them. So sorry. So yeah, we're very much the other way. We're trying to balance maintaining our share and increasing it in the areas we want, but actually on far, in terms of our terms, we've drastically changed them over the last 3 to 4 years. I think we're about 80% dearer than we were 4 years ago. And in addition, obviously, as I alluded to earlier, we're also charging in a different way as well. So that is an ongoing balancing act between retaining the right levels of work, whether it's locally or nationally, against having the right commercial base in place, and it's not easy.
So can I just? I'm going to do a bit of
some of these things where we're really strong.
I'm going to do a bit of salesmanship here. You're a big user of the Minerva software and the Minerva quote platform. How has Minerva helped you manage that process? And could you have done it without Minerva?
It's a real help because it's a massive help because we didn't have the level of data before we had Minerva, particularly around the instruction process. So it gives us much greater clarity in terms of the the level of, for example, our conversions, what area, who we're converting with, who we're not converting with, the time scales that we're converting in. So again, we and where our work's coming from, we've got a much clearer idea. Again, for example, what's our split of work that comes direct, what's our split of work that comes from a referred basis. So that Minerva work, and it's instant information. So no, it's more, we're more than as you know, we're huge advocates of the platform. We've been on board from kind of day one, and no, we've only got positive things to say. There you go, mutual admiration society.
Thank you very much. We'll try and keep the advertorials to a minimum, but there you go. So now we're looking at your actual data. I've highlighted a few key points in green. Perhaps you'd just like to fill in the viewers on what we're seeing here. I mean, 11.32 market share, that is really something, isn't it?
Yeah, it's good, but as you can see, we've got to recognise as well that it's down from where it was the previous year. This particular element of market share probably counterbalanced by some of the stuff that we've done in terms of fees. So there's a weighing out there. As I say, there's a real balance going on here in terms of that. But we have particular areas. Again, I'm conscious of what slide you've got where our share is really high. Our average price, as you can see on there, is high, a lot higher than most of the other competitors locally that we have. This is just our local work, because again, we are very, very strong in the medium to upper market, and probably where we do have some challenges, and we're doing some work to try and address that, is again with the model we've adapted, is probably losing out a bit at the lower end of the market, particularly first time buyers. And as taking the broader element of our law firm, conveyancing is about 35% of what we do. We have to be conscious of that, not just from a conveyancing perspective, but potentially from the broader impact that has on the overall firm. So that's probably our challenge. You can see from the stats, this is a market that's got half of the market is in leasehold property. Sheffield's quite unique in that way, but it's we've got a lot of long leasehold houses, and then obviously flats like they have everywhere else. I'm pretty time to complete. I'd like it to be better, but it's pretty solid within our market. And again, so that's generally positive. And although I think we are making progress in the post completions, clearly we've still got work to do there, because we're at the wrong end of the scale. And obviously, as you've highlighted in green, a very strong performance in number 5 best at 12 days. We're taking 28, so we need to look at that, and we need to make sure that we're moving in the right direction with that one. We're at the wrong end of that table, but mostly very positive.
Okay. Moving to the next slide. Now, I specifically brought this slide up because I think this is actually remarkable. What I've done here is we've looked at the whole of the Sheffield market again, but in particular, we're only looking at houses that are selling over $500,000. And I'm absolutely stunned by this. For a high street firm, Taylor and Emmet are running at 25.26, quarter of the market in properties over $500,000 were conveyed in 2023 by Taylor and Emmet. I mean, that's a real hats off to you, Steve. That's brilliant.
Thank you. And obviously that's hats off to many years and the team that do that work. I mean, a lot of that is reputational. Without any shadow of a doubt, over many years, some high quality individuals and teams doing that work, and repeat work comes in. We've got our profile is strong in the southwest of the city. As you know, we've moved to a very high profile office, which however, it is a share that is under a bit back. So we've got to be on our guard, because as good as it is, it's a sort of fundamental element of our business model. We have built a model, and we have deliberately done that. Although one of the interesting things is the time to complete is higher, as we can see.
I think some of that might be to do with some of the leasehold stuff you're doing in London.
It could be. I mean, again, I don't know if that's on these figures. Is that our Sheffield completions?
No.
Still, Richard, I'm not sure. Is it?
Sorry,
we obviously
it is.
do have quite a lot of.
Sorry,
it's got
it is,
Sheffield up there.
It is, yeah.
Yeah, so that's our Sheffield ones. And again, our average house price is probably quite a lot higher than the average firm in Sheffield, because we're doing, I think it's about 40% of our work is not I think roughly is not in our territory. It's off our
Oh,
patch.
yeah, yeah.
Again, we've got some national work, but it's a really strong figure. It's part of our core business model, links into our overall business model. Particularly, we're, as a firm, we're about 85% of our work's in the private client sector. We've got a huge wills and probate department growing rapidly, of a real national scale, and that sort of all spins off into this area. But what we do have to be aware of, that clearly, if we look at sort of Banner Jones and Wake Smith, for example, underneath, these guys obviously are catching up with us a little bit, and we've got to try and make sure we retain our share in that area, because it's sort of core to what we do.
That's right, and it's a competitive market, and we don't favour one firm over here at Minerva, although we're happy to have anybody else on the show if they want to come on.
Absolutely. No, we know that.
And finally, this is a really interesting graph that 20 convey providers, and this is your overall statistics for the whole country. This is not just Sheffield. It shows you the
heat map.
Yeah, it shows you the 44th biggest firm by volume in the country. That your total time to complete is 113, which is about bang on the average. And it also shows, quite interestingly, where you've done those completions. So this is a lot of, you don't actually go on any big panels, do you, Steve? You're not on nationwide panels of work that bring you this work into you. This is more your Sheffield customers deciding to move out of town and go and buy properties. Well, look at them. They're all over Britain. Obviously quite a chunk in London, but all on the south coast and up the seaside resorts up and down the country. So obviously people getting out of Sheffield and moving away,
well, a little bit of that. There must be an element of that. We do have one or two of our referral connections are more national in their work, so that has a little bit, that has an element on it. And I think, again, I'd say, great credence and to our teams over the years, because I think what we've got actually within this is a lot of people over the country who are utilising as maybe old connections who left the city and come back, family, that are maybe from Sheffield base, young people living in London and what have you. We have a whole range of clients that use us, and as you can see, the heat map is broad. We go right, well, we do quite a lot. I think it's about 60%. I might be wrong, but I think it's about 60% in the locality, and then all this, as you can see, very London centric and quite a lot in the northwest as well, looking at it, and maybe into the Midlands. So our reach, it does for a firm of our scale and size, it's quite impressive, something we're quite proud of.
Okay, and so you should be. So on that's
reflected,
Steve,
in our average completion price at 316.
Yeah, there you go. And whereas the average price in Sheffield is only 250, so I think that does it. And that, Steve, I think brings us to the end of this week's show. We're a little bit over time, but I don't think it matters too much. So I would like to thank you again for coming on today. It's been really fascinating, and hopefully you'll join us again later in the year.
That's Richard. Thanks very much for inviting me on. It's been very enjoyable. Good luck and see you soon. Thank you very much.
And thanks again to 20 Convey and to all your listeners out there and watchers. We hope to see you again in a couple of weeks' time. Thanks very much and goodbye.